Hey everyone, Dan here. We are about an hour after market close on Wednesday, July 14th. We're going to do our daily look at SoFi. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And let's jump right in. So, here's our year to date on SoFi. We see ourselves continuing to push down here with just a barrage of red days since we were in the 20s. Now sort of finding a resting point at this 1539 78.6 retracement level based on the larger umbrella run that we had, the longer dated run that we had on the announcement, and sort of continuing to follow this red trend line downward, kind of threatening to put ourselves into this $14 100% retracement range from the more recent run-up that we saw here when the actual merger took place. So, sort of more of what we have been talking about in previous videos earlier this week, and I kind of wanted to spend time today, talking a bit about the chart, but I wanted to talk a bit about sort of like just the psychology of some of these positions that we have and some of these like outlooks or conviction that we have in certain tickers and sort of how they can skew perception and how we might be able to kind of rejigger our framework in order to deal with the incessant dipping that we are sort of like left to deal with based on a stock that, many folks who watch these videos probably feel is remarkably undervalued, not only for the promise that it holds today, but the promise that it holds in the very, very near future. So a couple of things. One, just to sort of do our best on the charting aspect of things. I'm not going to add any additional, markers in here. I would say, a lot of times folks disagree in the comments or elsewhere on social media, and that's totally fine. There's been a lot of really great discoveries that have come from disagreements, and I don't mind those things at all. There was somebody who wrote me a sort of lengthy slew of tweets about how they disagree about this bouncing around period here, because at that point it was IPOE, which was just a SPAC, and now SoFi is a company and it has realities of a company behind it. But in my opinion, I would still assess it the same, because when this run-up happened, this was on the news that IPOE was going to be merging with SoFi. So the fact that SoFi is a company now and is traded as SOFI, that doesn't take away from the fact that folks could generally glean much of the same information as they can today from what was happening, here in March and April and May, when they were choosing to trade the stock bouncing in between these levels, knowing full well that it was going to be SoFi, unless something like weird fell through and that the merger didn't happen. Now, it did run up here, and we had done a bunch of work ahead of that run up, basically pointing out that there was this ridiculously overleveraged short interest in IPOE, and yes, a bunch of that was hype, I have no doubt, but I also believe that a bunch of that was squeezing out a bunch of those shorts. And if you want to go back and look at the videos from that time frame, I go in depth into all of the data and the details around what was happening day to day to see those changes in what was happening, as I was speculating that a squeeze was pushing the price along, as well as the hype of the merger. And I think part of the person's point was not only what I had just mentioned, but also that the stock is heavily manipulated and being pushed down sort of destructively. And while I don't disagree with that, I think it is part of the psychological burden that folks sort of take on when they kind of have this conviction in a stock that they think is very promising, and they see it just continuing to get sort of obliterated in the market when it had just sort of like tried to make a run at highs in the recent past. So, this is just to say that there's a lot of reasoning, a lot of excuses that can be made, and I just want to sort of try to separate some of these things out, and let's work through it a little bit today to and I'm just going to sort of share how I set my framework on these things in my mind in order to kind of not let myself get too, I don't know, jaded or in despair or just feeling like everything is out of control and you can't count on anything. I don't want folks to get to that place if they don't have to. So, but again, these are just things that help me. So to the extent to which they help you, cool. If not, I definitely understand. But yeah. So anyway, sort of a slight sidebar there, but checking in on the RSI if we need to. Obviously we're getting into oversold territory right now. Could give us a little lift. Obviously, these things have not, come out of nowhere, as the price is selling off. Of course, it's running out into oversold. That said, here on the daily, I mean, we're at 31 way back when we had this sell-off here, and then, it spent all of this time in overboughts, but we're actually as oversold as we've ever been on the RSI based on the daily chart. So something to just sort of like contemplate, put into perspective there. On the MACD, of course, the bearish momentum actually showing a bit of a slide, curling back toward kind of widening out and winding down a little bit. That said, it could always do sort of one of these where it looks like it's dying off and then it just like accelerates rapidly. But we do see that the depth of this area in the histogram is not nearly as deep actually as this area back here in this sell-off. So, and this was a decent, bullish area of the histogram here. So to the extent to which this can start to sort of curl over and have a bullish crossover, obviously it's well under the baseline, has opportunity to run. That said, I don't know that it's really going to die down and cross over prior to us getting into the 14s, but this is part of what I want to talk about today and sort of just like wrapping one's mind around these different price points and watching the price plummet in a company that you have a lot of hope for. Quickly, just sort of like finishing up on the data side of things, short sellers coming in strong. So again, I know some folks like really despise hearing about the short sellers in SoFi. I don't know why. I think there's sort of like this short seller fatigue given the GameStop and the AMC situation, and then having it bleed over into Wish and Clove and Workhorse. And I was a big proponent of the IPOE short squeeze, but they're a real thing that exists in the markets, and we know that their goal is to drive down the price of the stock, and that's what they profit from. So why you would ignore it, I don't quite know, but so be it. But anyway, we see here on the chart after this is the day in which it was up at like 45 on the ratio, and obviously dropped down significantly, but we see it doing nothing but creeping up at this point, and 30 plus, as we know, is incredibly high short volume ratio. Anything in the 20s is high, mid to high 20s is very high, 30s is bananas, as I've said for months and months and months in these videos. But I think that there's honestly something broken here on Eyebrow Desk. I don't want to say that this person's tool is broken. It may not be, but it just does seem weird to me that we see obviously changes in the short volume ratio from day to day, and like an increase of 10 from just the 8th to yesterday and today, but yet on Eyebrow Desk we don't see shares coming out. We just see this pinned to this 10 million. So I don't know what the deal is, even though we see the fee slightly changing and we see the timestamps changing. So I'm for the time being, until I see some fluctuation in the available shares, I'm going to take this with a big grain of salt. Swaggy Stocks has SoFi now today as the 4th most commented on ticker, getting closer to a mixed sentiment, but still definitely more positive than negative. 66 positive comments, 32 negative. And again, this is just to bring into account the fact that to the extent to which retail can come in and have interest in SoFi, I think that it will definitely help. Folks that think SoFi is a great company, I mean, what should be a sort of common offshoot of great companies would be that retail takes an interest because they see that it's great too. I just bring this up because I kind of don't know what to make of it, but I don't want to ignore it. But FinViz, again, I can't find this being supported anywhere else. Ortex still has this like no data situation going on. MarketBeat doesn't have any data going on. High short interest stocks or whatever that website is doesn't have SoFi showing over 20% of the float being shorted, but FinViz is sort of the outlier here, showing this 41.61% short float. I don't know, but I wanted to mention it just to sort of like tie out all the loose ends and kind of make sure that it's mentioned. But that's the data as we have it today. But I would say from this alone, pretty obvious that shorts are piling on as they're seeing this coming down, and I would argue more so that they're seeing that they've been successful in manipulating this down this far. Look at all of this selling pressure. I think they sort of just piled onto the expiration of lockup shares and the fear and or reality of selling pressure that introduced into SoFi, and they saw that as an opportunity to thrust more selling pressure on it and capitalize on that. Now, I think it's worthwhile to shift over into sort of like the framework that I wanted to discuss today, and just sort of like the psychological weight in which I think folks bear in a stock like SoFi. So obviously SoFi coming to market via SPAC, IPOE, kind of coming on at a relatively early stage. You would assume things are generally coming on via SPAC, not just because it's sort of like quote unquote easier, but because they are sort of a bit premature to do a more traditional IPO. And that can be fine, but it definitely comes with sort of some immediate fear and uncertainty around the company. Just saying like sort of, are they ready for the big stage? Are they really ready for the pressure of a publicly traded company? All of the sort of like transparency that they're going to have to produce, and sort of like the realities of the business, and even still perceived losses that they have, and sort of like valuing a company in the positive that is still returning negative earnings per share, something like that. But here's how I kind of frame this in my mind. Yes, we're dipping into some sort of unforeseen, like dippable black hole. But I try to think of this in two separate ways. And I sort of tried to allude to this before, but maybe I've not been as explicit as I could be. I think of all of this stock activity in two ways. One, in the trading way, and two, in the investing way. And I completely separate the concept of these two things in my actions and in my mind. To me, the trading is devoid of what the company is. I don't care when I'm trading a stock what the company is, what they do, if they're legit. All that I'm looking for is what the trend is saying, what the price action is saying, what the indicators are saying, what it is that I believe the price will do based on the current and previous price activity. That to me is the trading that I participate in. This is if it's a day trade, meaning like an intraday trade, or a short-term swing trade, meaning that it's something that I hold for 1 to like 10 days, or if it's a longer-term swing trade, which for me is about 2 weeks to maybe 6 weeks. These things to me are trades that I see because I see trading signals and I see setups that occur in the chart. I've traded a lot of stocks, and this may make you think that I'm naive and an idiot, and that's fine. But I've traded a lot of stocks where I have no idea what the company does. Like I don't know what industry they're in, for example. But I see the trading setup, I see the volume is there, I see the sentiment is there, and I go with it. I go with the setup. And as you know, a lot of times that's doing something like dip buying into price strength. So I'm even trying to catch something on a downswing. Or my true favorite, channel plays. But again, that still is often dip buying into price strength, just in a slightly different way. I'm dip buying something that's in a channel and it's coming down to the bottom of the channel. So therefore, it's threatening to break the channel to the downside, right? But I will play the trend. And to me, that is a trade. Now, obviously, if we're trading SoFi, right now things look very bearish. And you would be probably smart as a trader to act accordingly and trade in a way that would allow you to profit off of a bearish trend. Because obviously, I don't know anyone who would argue that SoFi is in a bullish trend right now. Go ahead and make the arguments in the comments if you want. I mean, even if you just pull in the MAs here, right? The price is sitting well underneath the MAs, and the 20 is like fully set up right now to cross over in a bearish pattern, cross over the 50, which would be then a full confirmation of that bearish sentiment sort of playing out. And if you're trading and you don't like to trade things that have bearish setups because it can be just sort of like a bit of a screwing with your mind to try to like profit from something that's moving down, or you just have a hard time sort of like deciphering the charts on the downward motion versus the upward motion, I definitely understand that. And in that case, the trade would just be to stay out of it until that trade and that trend reverses, and then you have a bullish trade to participate in. So that's what I look for on the trading side of things. And trading SoFi right now, it is a fully bearish trade. It has been for a while. Now, on the other side of things, we have investment. Now, I just went through this whole video, a couple of them that I can think of. One is the earnings, the what to look for in the earnings report. That is based on the company itself, right? That's based on fundamentals of the company. That's based on previous historic precedent from this company itself. And then, of course, the deep dive into the price targets that I have, where I talked about the $50 price targets and, so on and so forth with, the 5-year and I guess I did 2025 and 2030 with the market caps that I would see, as those time periods sort of evolved. That to me is the investment opportunity. And in the investment opportunity, I'm not that concerned with this short-term trend. Like in the instance where I'm buying a stock because I see it going to X, Y, or Z in 2025 or 2030, or even just within the next 12 to 18 months, like I talked about that $50 price target. I don't care if it's gone on June 2nd from $23 to July 14th, so over the span of about 6 weeks, has gone down to 15 and some change. I don't care. My outlook is based on the company. It's based on the leadership. It's based on the market cap. It's based on the industry that it's in. It's based on the projections of the company. It's based on what they purport to be working on and their progress toward those goals and what it is their vision is that they're trying to execute on, and the ability to do so based on the leadership that's in place at the company. So in that realm, I would sort of be of the mindset of, yeah, give me the cheap shares, man. I'll average down to a price point that I'm comfortable with. There would, of course, be a price point that I'd be uncomfortable averaging down to, that I would sort of be more apt to kind of park that money on the sidelines and wait for it to show signs of trend reversal. But I mean, this would be something of like several months bearish trend. It wouldn't just be 6 weeks. When I'm looking at 18 months to 9 years in the future. Right now, I don't have any positions in SoFi that are less than about 18 months. The most sort of like pressing one that I have is my call option that I have that expires in January of 2023. So it doesn't bother me that the price is where it is right now, and I bought that call option a couple of weeks ago, or whatever it was. As I think folks who've been watching these videos for a long time know, I did have a bunch of shorter term options and shares, and I said when I closed those out, and those were trading positions. Those were things that had expiration dates of a few weeks into the future, maybe a couple of months at the most, and or shares that I was intending on holding in order to play the hype, and the short squeeze that I was purporting was in play when we were running up from 14.14 or whatever that price point was. So I try to do my best to completely separate these two things out in my head. And so because SoFi has been in this bearish trend for a while, I haven't taken any short-term positions. It would require a true show of strength, which we've talked about several times in other videos about dip buying into price strength. There isn't any price strength to dip buy into at this point. Not for a short-term trade, something that's going to last a day to 6 weeks. That thing doesn't exist. So I think you have to decide what it is that you are trying to do with the trades that you're executing at this time. Are you executing on those trades because you're doing something with a shorter term position? If so, you should be well aware that this is in a bearish trend, and I hope that you're making trade decisions based on this stock being in a very clear short-term bearish trend at the moment. If you are like a big proponent, a huge fan of SoFi and what their vision is and their leadership and where it is that you see their price and their market cap going in the future and who you think they could compete with and so on and so forth, then, you should be trading or investing based on that mindset with that sort of like risk reward in mind in that time frame. Part of your risk reward management is the time frame in which you are trying to realize the rewards for the risk that you're taking on today. So, to me, it helps sort of like keep these things in perspective. I don't care about a 6-week bearish downtrend. I don't care about a 10-week bearish downtrend. If we do this for another month, I really wouldn't care for those long-term investments that I have at the moment. And the other thing that I would say is if you are focused on the shorter-term trend or shorter-term trading arrangement for yourself, then I would pay strong attention to the short data. It doesn't do you a lot of good to come in and complain about how heavily manipulated the stock is, how heavily shorted it is. If there are naked shorts coming in to artificially suppress the price, yes, I know it sucks. But if you're trading in a short-term type of session or a short-term mindset, you may want to sit out if a stock is heavily shorted and you don't see the opportunity for a short squeeze or a gamma squeeze or something like that coming into play, or institutional investors coming in to sort of like save the day or reverse the trend, or something like that. It might behoove you to just sort of like either play the trend is your friend until the end, or just sit it out and either play your longer term game because you think the company has amazing prospects and you'll be cool with the cheap shares, or just sit it out, and that's fine. And I think you also need to consider how heavily you're going in as a percentage of your overall portfolio. If you are going purely long term, like I'm not concerned about short term gains on my long term holdings. I don't. If they go down in the short term, I don't care until I change my conviction or my thesis on the company or the investment as a whole. I won't divest myself from that investment. And also, that short term sell off. It doesn't have this like really outsized negative impact on my portfolio because I don't probably put double digits as a percentage of my portfolio into super long-term positions because I don't want that much capital tied up in that lengthy of a time frame. I don't mind building to that over time, but it would be, as we progress closer to realization of some of the prospects or goals or vision that I see the company needs to execute on, because I also have been a part of a ton of startups. And I know that there are many, many, many more ways for a company to fail. Even if it's a publicly traded company, there's many more ways for it to fail than there are for it to succeed. And that specifically pertains to these growth sector companies that have really aggressive visions for the future, that they're trying to change entire industries. There are many more ways for them to fail at that than there are for them to succeed. And I'm not naive to that fact. So I don't tie up huge percentages of my portfolio that I'm uncomfortable with going down in the short term because of the long-term upside that I see. So I hope that those things kind of make sense. I know this has been a long rant, and as you're sort of staring at a computer screen, and I apologize for that. This would probably be a good one that I could have split up into, look at the chart for the times that we're looking at the chart, and then flip to, a video of myself and my wild hair and unkept beard. But that didn't occur to me until this very moment. But anyway, this is just to sort of try to say, don't take on too much of a psychological burden with how you view a company versus then what's happening to the stock in the marketplace. There's a bunch of different factors happening at any given point in time, and everything passes. And we could be looking back in 8 months or a year and be like, oh, you remember that weird blip on the radar screen when it dropped from like 24 down to 14? Yeah, that was like a really wacky couple of months, but thank goodness we are where we are now. I mean, that could definitely happen down the road. I don't know. Then again, we could say, oh man, I wish I had sold my shares at 13. I would have gladly taken the profit, or I would have gladly stopped the bleeding there, I guess is what we would say at that point. But you don't know. You don't know what the future is going to hold. So I hope that this can just sort of like help some of you get through. I don't like to see people struggling so much with the idea that like, this is an amazing company. How is it falling? Oh, it's super manipulated. Oh, that's so shady. That sucks majorly. I mean, it just, these are the realities of the market. You just have to remember the space in which you are playing. It's a manipulated space. Fundamentals and a company itself, I think, matter in the long run. In the short run, the market doesn't care. And right now we're in a short-term bearish downtrend. That's just the case. So if you're trading, trade that, in my opinion. If you're investing, invest in what you believe in my opinion. All right. I hope you all are making it through the week well, and that you're getting along just fine. I appreciate you watching if you made it this far, and I will see you in the next video.